The pound fell dramatically against a host of other currencies on Friday as Britain headed for a hung parliament. On Friday morning, sterling lost as much as 2.3% against the US dollar, before bearing some of the losses to trade at around $1.2735 to 1.7% down on the day. The FTSE 100 main stock index opened 1.3% higher, though strategists warned that the result would likely plunge domestic politics into deep uncertainty and raise major questions around Brexit. Brexit talks are now likely to be even more unsettling for markets, and the prospect of another election raises the risk of a delay, potentially leaving the UK without a negotiated exit settlement, said Mark Fell, from UBS Wealth Management's Chief Investment Office. Although we believe the pound had already priced in much of the hard Brexit risk before this vote, the currency will continue to experience volatility through the governmental and Brexit talks, he added. The FTSE 100 has in recent months tended to trade higher when the pound falls, as a result of its high international exposure, but analysts said that significant uncertainty now would likely lead to investors turning cautious on any and all UK assets. Jamie Larmud, Vice President of Market Research at currency exchange broker FXTM, said that this looks like another example of traders being on the wrong side of the trade after heavily stacking their cards in favor of a landslide victory for Theresa May when pricing in the UK election. Neil Wilson, an analyst at ETX Capital, said the outcome had the potential to be the biggest upset in British politics since last June, when the UK voted to leave the EU. Immediately after the referendum, sterling sank 10% against the dollar, taking the currency down to its weakest level in more than 3 decades. With all but one seat declaring, the Conservatives are the largest party with 318 seats, a loss of 12 seats and 8 short of the 326 required for a parliamentary majority. Labour gained 29 seats to 261 while the Scottish National Party finished on 35 seats, the Lib Dems 12, Plaid Cymru on 4 and the Greens 1. Commenting on the earlier exit poll which closely mirrored the actual result, Samuel Toombs, an economist at Pantheon, said it was a thunderbolt for financial markets. Theresa May's electoral gamble has catastrophically failed, said Tom Stevenson, an investment director at Fidelity International. The market reaction to this unwelcome outcome is likely to hit UK shares, bonds and the pound. Markets will likely remain on the back foot while the difficult job of putting together a workable government is undertaken.